Hi everyone, I'm Sidney McKinnon, MD and CIO of Cadiz Asset Management. Welcome once again to another in the series of all things fixed income. I'm often asked by investors or potential investors, how do I go about investing in fixed income funds? What are fixed income funds? How do I get to have exposure to fixed income funds? And am I investing in money market instruments? What am I investing in? Or am I investing in bonds? How does this affect my choice of investments? So I thought that today I'll chat a little bit about that. At the end of the day, generally speaking, if you are investing, and you can be investing in anything, it comes down to the risk that you are willing to take in terms of your investment. So if you are investing in gold coins or oil paintings or the stock market or the bond market or the fixed income market, it boils down to the tolerance you have in terms of your risk parameters that you have for yourself. Now, everybody's risk is different and the risk parameters are different. And therefore, it is wise to consider all asset classes, including the fixed income asset class, and the asset classes within the fixed income spectrum when making and deciding upon your investments. But coming back to the risk issue, risk is defined as the exposure to the possibility. This is the dictionary definition, I believe. It's defined as that exposure to the possibility of experiencing a loss or being injured or having some other unwelcome or unpleasant experience. Now, that's the dictionary definition. One can apply it to the investment environment as well. The possibility of experiencing a loss, for example. If I'm willing to lose all my money, obviously, I have a very high risk tolerance. In other words, I'm willing to risk quite a lot and potentially over a short period of time. But if I don't want to lose any of my investment, then I have a very low tolerance to risk. And those are the issues you can discuss with your financial advisor when getting involved in the investment arena. However, let's look at the fixed income arena. And to this end, at Cadiz, we've developed various products so that you can get involved in the fixed income environment based on your various risk tolerance. Now, on the low end of our risk tolerance curve is our product called our money market fund. This is a fund that provides you cash-like returns at a very low cost and at a very low level of risk. Fundamental building block in a lot of our investment portfolios within the fixed income arena, and it provides you with cash-like returns. Obviously, because you are taking on a fund that has lower risk parameters, your chances of higher reward therefore diminishes. However, if you are able to tolerate a bit more risk and then get involved in and seek cash beating returns, we have a product called our enhanced income fund that does just that. It gives you cash beating returns, once again, pretty much in the low risk environment, but added risk that you would not take on, for example, in a money market fund, because it uses different techniques such as credit to achieve that extra cash beating returns. Now, the fund has been going for many, many years and has consistently beaten its benchmark in terms of providing you with that cash beating returns over certain periods of time. I think that's the other important thing, and I'll just pause there once I've spoken about our two products on the low end of the risk spectrum is your time horizon. Speak to your financial advisor. If you are willing to invest for a year, 2 years, 3 years, 5 years, 20 years, it makes a difference in terms of the risk tolerance that you are willing to accept within your investment portfolio. Up from the enhanced income fund that gives you cash beating returns is a product called our absolute yield fund. This fund is run a little bit more aggressively in terms of providing you returns relative to the cash environment that is enhanced even more than our enhanced income fund in terms of the returns that it seeks. this particular fund uses more techniques in terms of achieving that objective. In other words, it invests in instruments such as nominal bonds, inflation-linked bonds, credit, floating rate notes, and of course the money market environment, including some international exposure through currencies such as US dollars, for example. So if you are able to take on a bit more risk, which means greater volatility, then you will have a product in our absolute yield fund that provides you with that kind of greater risk exposure environment, but the ability to earn better, and I know I'm using the term better as a relative returns, but higher returns over your time horizon. The last product I want to talk about is our bond fund, and this is higher up on the risk spectrum, bearing in mind that the fixed income risk spectrum as a whole is a very low, relatively low risk spectrum relative to other higher risk asset classes out there. I'm not going to mention them now, but because this is specific to fixed income. But our bond fund provides you exclusive exposure to the bond environment. And here, the bond environment or bond investing is very, very sensitive to the movement in interest rates, or more so to the directional movement in interest rates, which, of course, means that any movement in the interest rate environment will either result in a gain, capital gain, and I'm using it in terms of the asset itself, not in terms of the tax environment, will give you returns relative to that movement. So any movement in interest rates will affect the movement and the returns of your bond fund. However, as an asset class, it is an excellent asset class to be part of your broader portfolio to provide you with that diversification within the broader portfolio context. So let me end off by saying that, once again, any investment, whether it's in the fixed income environment or not, is bound by your risk tolerance. And within the fixed income environment, our products cater for that. It's also very important to consider your time horizon, how long you're going to be invested for, when do you need to exit your investment. And then thirdly and finally, remember to diversify, which ultimately would lower your entire risk of your portfolio based on your exposure to the underlying asset classes. Thank you once again for watching. Until next time, this is Sidney McKinnon, CIO and MD of Cadiz Asset Management.